Hello.
Okay, so the recording started, and for those of you that are joining us here, we're just going to give everybody an opportunity to click in there. As we know, the system needs a moment to actually allow you to join, and then I'll welcome everybody and we'll get rocking and rolling. Cool, awesome. We got a whole bunch of people flying in because I was a minute late in starting the webinar. Terrible. Okay. So for those of you that have joined us, and I know that there's many of you that are still signing in, just welcome this evening. I'm super excited to host this for you this evening with my two really good friends, Elisabeth Dawson and James Carmody, who, if I've set this up correctly, you should be able to see all three of us.
Hello.
So by the way, for those of you that are attendees and participants, I just really appreciate you being here. I really appreciate you taking the opportunity to have this conversation with us. And, I don't know how your day was, but mine, again, was like up, down, left, right, and certainly not perfect. So, I'll share a little bit more about myself and the things that I've been going through as a small business owner and as a husband, as I'm sure will as Elisabeth and James. And really I would say that to summarize what our intentions for this conversation is we just want everybody that joins us tonight to walk away with something of value, to actually be empowered, whether it's in your personal life or in your professional life, whatever that's going to take. And so we know that, like, I'm dealing with things in all the areas of my life, like physically, emotionally, spiritually, mentally, and in my business and in my finances. So I really invited Elisabeth and James along. And honestly, it was really a collective idea of the three of us. And I don't remember exactly how it happened, but it was something like we were trying to figure out, well, how the heck do we actually provide value to the people in our life? And Elisabeth, you came up with hosting a Fireside Chat.
Yes, so I thought it would be something where this is something to kind of calm our nerves, but to know that we're all involved in this together. This is a global situation. This isn't just, hyper-focused on one area of our country. It's very different than 9/11 that was very focused on the East Coast, and there were so many people that are involved there, and personally I had family and friends there too, but this is something that's affecting the entire world. So we can relate to people in other countries, we can relate to people that are within our own communities, we can relate to people across the country, and we're all going through this together. So I think that this unique experience that we have now is, how can we give back? There's so many people that we all interact with, and we all have different relationships with, but this is an opportunity for us to kind of share how we feel, but then also to kind of get some ideas for the future and to get some stability, because we have something to be grateful for. We're all alive. Yeah. I hope and pray that each and every one of you are healthy and safe. And for the most part, this is an opportunity where, waiting for something to become normal, we might be waiting a really long time.
Right.
Yeah. And that really long time is, how long are you willing to wait to make that new normal your normal? So we have a different opportunity here right now. And as some of you, I know some of my clients and friends are on this webcast, but as some of you know that I kind of work and coach with you, I also have a coach, and I know that James and I know that Drew also have a coach too in their lives. And it's so important now, because what my coach has been telling me is that we can either live in fear during this time, and I think we're kind of going through that numb spot, but we can either choose to live in fear, or we can choose to take charge and to really have an acknowledgement period and a growth period and an area of opportunity period. And I think that bringing like minds together, and each person has a voice and each person might have a question, and we can answer those questions because it might be from, where is their financial strength in the things that we do, or where's the financial strength in the real estate market, or where's the financial strength in these banks, and all the different entities that we do business with. If anything, our goal, I think, between James and Drew and myself, and we also have Katie on here, and a lot of you know who Katie is, but at the same time, we're all coming together as a team to make this, a voice to be heard. I have a dear friend that has told me, he goes, well, I'm not necessarily called an essential services, and I feel terrible because I want to give back. Well, I think this is a way that we can all give back to kind of create that maybe sense of peace, or that sense of calm, or maybe come up with a stirring of new ideas and opportunities. Coming from the financial world, we're always told to buy low and sell high, but we kind of get reversed in that. We get reversed because when everything's going great, 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 we always think, well, gosh, there's going to be more to come. Well, if we have a balance to all this, market volatility, economic volatility, none of those things should matter. It should be based on the goals that we have, and that those dips should already be planned for, whether that's in, again, the financial markets, or whether it's in the real estate markets, or even, James having to deal with the banks and how they might be a little bit more tight with how they're lending money. We've got to have a voice to be able to answer. So I know the three of us have been doing a lot of research and trying to find out, information for business owners, economic impact information for business owners, but then also for maybe, I know my son's on this call. Hi, Trevor. And he's so interested in wanting to invest in real estate. So I know that he's going to have some questions for both of you. And this is going to be just, what's the great outlook? I watched something earlier, and it was the conversation, well, do we think we're in a recession? The answer is pretty much yes, but this is uncharted territory. But we're in a recession that really, there's economists that think we're going to have a faster rebound than we've ever had before. But at the same time, I'm hearing these questions too. Well, are we in a depression? Well, we can choose to be in a depression if we want to, but let's not choose to be in a depression.
Right.
We have a personal choice within our personal lives, within our personal economics, whether we want to be in a depression or not. And yes, a depression from a financial standpoint is another opportunity, another situation, but it could also pose with great opportunities. So my passion for this webinar is to kind of give some ideas, maybe spark some thoughts, and say, boy, it's not a time to not touch my information about my finances. It's about a time to find opportunities in my finances and to really take advantage of these, real true opportunities that I think that are out there. And I think each and every person can take advantage of if we get our heads out of the sand and we're not just that ostrich. But I don't want to take up all the time because, I can talk a lot.
That's all right.
This is the opportunity for all of us to be heard.
Yeah. On that note too, and then James, I want to hear what you have to say, but just so everybody who has joined us, and right now there's almost 30 of you that have joined us, so thanks for being here. So that there's a couple of people that are operating in the background here. I'll just tell you sort of how the rest of this is going to go. Many of you sent us questions in advance, which is awesome. We really appreciate you doing that. Kelly Moore, who's on my team and my operations manager, many of you know her. She's also a host in the background right now. And yeah, you can hear her. Hey, Kelly. She's going to be reaching out to you and asking you if you'd like to ask your question live. And if you'd like to ask your question live, you can either come on just by voice, like you're joining us, like sort of a dialing into the radio show, so to speak. Or maybe you want to join and actually be in the conversation live on camera. And we can absolutely bring you into that. We really do want this to be a dialogue. As certainly, I don't think that James or Elisabeth or myself would ever profess to say that we really have any real answers here. And I think that anybody that is in this situation, who is a professional, regardless of the level of professional or the level of pedigree that they have in their profession per se, I don't think that anybody can really say, well, this is the way that it is, and gosh darn it, this is the way that it's going to be. So what I mean to say by that is we really want your participation. You know, I want to hear what y'all have to say. So there is a Q&A function as well. If you didn't submit a question and you have a question, please do go ahead and use the Q&A function at any point. You can go ahead and type your question in there. Kelly will get back to you right away, and then you know, we'll either bring you into the conversation or she'll ask the question on your behalf, whatever you like. There's also one.
Oh, sorry.
No, there's also one other function I want to point out, and that's you have the ability to raise your hand as an attendee. So from time to time, we might just say, you know, so if you're experiencing this, you know, would you raise your hand, just so we can get a sense of, are we talking about something that everybody is dealing with or not? Because we want to make this of value to everybody in some way. So, okay, I think that's about it. You know, like, we should get rolling.
Yeah, I was just going to say that to anybody who's not familiar with the technology and who did submit a question, if you look at the bottom of your screen, there's a chat function, and I have chatted some of you just to ask if you want to share your question via voice or video. It's up to you. So just feel free to respond to that whenever.
We'd love to have you join us. James, how was your day?
My day was an adventure, to say the least. So, you know, as you guys can see, I am in my garage. That is my 2-year-old's little tyke basketball hoop over my corner, and, you know, all of my wonderful Tupperware things for storage. And I think that's a Christmas candy cane, you know, over my other ear, and then my trash can and recycle. And that's, you know, this is currently my new normal. You know, so to give you guys a little bit of introduction and a little background about, you know, what I'm currently dealing with, you know, with this quarantine and everything that's going on, you know, so I'm one of the owners of Synergy One Lending. We're a local mortgage bank here based out of San Diego. I've been a residential loan officer for 17 years and absolutely love it. And I also host a podcast, a radio program called the Rise Up Network, where we talk about, you know, servant leadership and people giving back to the community. And currently today, I'm having this conversation in my garage, in my home in North PB, while my wife is feeding our newborn son, Finn, in the other room. And hopefully my 2.5-year-old isn't like terrorizing the house. So we have a 2.5-year-old son and a 1-month-old that was born March 5th. And then I think we got, as San Diego and Californians, the recommendation from the governor to stay at home about 10 days later. So you can imagine that was a little bit terrifying. So what I'm dealing with is, you know, being a dad to a young family, being a head of a household, working out of my garage, essentially running like a mortgage business out of my garage and leading a remote team that's spread out between LA to San Diego to East County. And then another company that also has people in Los Angeles, and trying not to eat every 10 minutes because I've put on about 15 pounds. And the COVID-15 is very real for me. So that gives you some context in everything that I'm dealing with. And, you know, don't hold back on any questions, whether it be professional or personal, because really we're all kind of getting used to this new normal. So that was a lot.
Well, thanks, James. Okay, so y'all, I screwed up in the setup of this and I've now fixed it. You can now actually respond to Kelly's chat message. Thank you very much, Linda Morrow, for pointing that out. I really appreciate it.
We're all human. Drew, do you want to kind of say what you do?
Yeah, so for those of you that don't know, my name is Drew Walker, as indicated in the lower left-hand corner of the photo that you're looking at. And I've been a real estate sales professional, and I have my own practice called the Walker Group. We're 5 agents strong, and we've been selling in San Diego for about 12 years. I live here in San Diego in University Heights. You are looking at the illustrious and super cool, I would say, basement office that I have here in my home. And my husband, Arlen, is somewhere in the house along with our 2 dogs, Sergeant Chocolate Chip and Captain Biscuit, who are awesome and yet will likely interrupt us at some point throughout all of this. So, you know, they're awesome though, and they are the light of my life. And they're pretty much my primary thing that gets me through every single day. And Elisabeth, I don't, I know that you said a little bit about yourself, but I don't know that you necessarily, no, you did. Yeah. Did you cover everything?
I didn't cover everything. I'll kind of share a bit.
Okay.
I've been in the financial services industry for now 21 years. I own two companies. They kind of have similar names, but one's called Copia Wealth Management and Insurance Services. The other is called Copia Wealth Management Advisors. We have several employees, and it's been a blessing to do what I do. I feel like I'm in the business of changing people's lives for the better every day. And this has been kind of a crazy time for us all because people watch that stock market go whoop and go whoop and whoop. And the new normal for the stock market is a completely different animal than it's ever been, because just to kind of give you some relationship to that, if you're watching the Dow, that's usually what they're showing on the news. Usually the S&P 500 is what you should be watching, but let's just talk about the Dow for a second.
Oh,
With
that's,
the
by
Dow,
the way, can I pause you for a moment?
Sure.
That is great to know.
Yes.
That right there is just great to know, because I watch the Dow and it makes me want to pull my eyes out.
Yes. It makes a lot of people want to pull their eyes out. But to kind of give you some relationship, just some relationship.
Okay, good.
Back in 2008, so it started in 2007, the massive majority of the drop happened in March of 2009. The worst downturn went down over 50%. So when we kind of see these things and we kind of get uncomfortable with it, but any one day swing that it ever had was maybe 500 points, maybe 600 points. And if you went through that kind of a swing in one day, we were in a recession. Today, the new norm is it'll go up 500 points, it'll go down 500 points, it'll go up 1,000 points, it'll go up, down, down 1,000 points. So that major drop that actually occurred of almost 3,000 points in one day, I mean, it was something that's just, like they keep saying this word, unprecedented. But it's something of a natural point to talk about, because it went down so big so fast, and the market needed to go up to keep up with inflation and the cost of things and the cost of goods and services. But those drops and those swings, I mean, it'll give people an ulcer. So yeah, having those conversations with people right now has been, the market should never have an impact on your ability to live, to work, or retire. It should have an ability to enhance it, but you should never be in a position to lose from it. So really what we do in our practice, and Katie's actually on this call with us. Katie's our case manager. She works with every client that we work with. And we have an entire team that really handles service and making sure that the business is working well. But within that whole breadth, it's about coaching our clients to understand and educate them based on what their options are. How do they want to protect themselves? How do they want to protect their money? How they want to plan? And as a fiduciary, we're goal-based. It has to be based on our clients' goals. In the past, what most people would do is go to an agent or go to a broker, and it's not anything about their goals. It's just about buying a product or selling something, right? Within the whole process of this, it's the whole financial, conundrum, if you will, the whole financial picture. And how does it work with real estate? How does it work with financial banking? How does it work for having lines of credit or liquidity for emergency purposes? How does it have something called a wealth recovery account that you can actually recover wealth that's been given to financial institutions unknowingly and unnecessarily all these years? A very interesting conversation I had with a client today. They said,
can you say a little bit more about that?
Yeah.
Because you mentioned that on a podcast that you led recently that I just listened to, which by the way was brilliant, where you talked about this concept of that there's these monies that are going out, and there's an account that you could set up called that you would call a wealth recovery account. Maybe say a little bit more about that.
So when we go through a true analysis with people, and it's going to be very different now going forward, because now people are looking at things and they're getting a little bit more conservative about what they're spending money on. So I should actually have a copy of my book so I could show it to you, but we talk a little bit about what's a wealth recovery account in the book. It's chapter 5. The name of the book is called Wealth by Design. We should all design our life. Why not design our wealth? So that kind of some of those ideas, but what is a wealth recovery account? It's every dollar that's been unnecessarily spent to a financial institution, to a bank, to the government, and maybe excessively to our lifestyle. So again, a couple I spoke with today, they're telling me all about all this found money that they came up with in their budget, because we tell ourselves we have to have certain things. But do we really have to
Mhm.
have those things? We're all in a completely different time period now with our relationship with money. Some people have it, some people don't, some people are getting it, and some people aren't. So now that consistency for cash flow, or the money that needs to be saved from these financial institutions that we do business with, is that much more critical. Because number one, we need to have an emergency fund. You know, we're told, oh, 2 months pay, 6 months pay, 12 months pay, but it's a discipline to get us there. But if we actually want to have a better rate of return on our investments overall, if we can start to take back those unnecessary dollars that have been going to financial institutions in fees and costs and maybe excess spending, or we didn't do enough research to find the best price, those are what we call lost opportunity cost. And a lost opportunity cost is a dollar that you cannot ever get back. And you can never get the interest earned on that dollar for the rest of your life. So let's just say we're paying, an annual fee on a credit card. Let's say it's $100. It's kind of common, but that $100, what are you getting for it? Everyone thinks, oh, I'm getting miles. I'm getting something in return for it, right? But what does it cost you to use those miles? So that $100 is your basically giving away unnecessarily to a financial institution because you think you're going to get something in return for it. But just think about that credit card company, that financial institution. They're getting hundreds of dollars from thousands, if not millions of people that have that credit card. They love making money on you. Financial institutions are, they're dialed into it.
This
So
is like hitting me right in the middle of the forehead. I
So-
have lots of credit cards with lots of annual fees, and I justify it because I do a lot of traveling and I collect a lot of points, and thereby I get a lot of reward. But what you're saying makes a lot of sense.
Yep. So maybe we need to have a conversation, Drew. But it's the lost opportunity cost that you can't get back that $100 per year, nor can you get the earnings on it. Yeah. Yes, you can't get the earnings back on that. So
Yeah.
it's really now a challenge. And I'll just put it out there. For anyone that wants to do a cash flow analysis about how they're spending money versus what they think they're spending, because we usually have in our mind some kind of a budget that we'll be willing to spend for groceries or going out. My husband, I'll be the first one to say I'm kind of the guilty one of this too, because we're so busy. Our entire society is so incredibly busy. So what do? Oh, well, we'll go to dinner, or we'll get dinner sent home, or we'll do something like that. Well, my husband tells me, he goes, I can't tell you how much money we're saving by not going to dinner at night. And that I'm making my lunch every day in my office, because my husband is an essential employee. So he's actually out and about with people every day. And it's a different world. I'm making my own lunch at home because I'm not having someone send me, I don't know, Grubhub, all those different things every day. And it's just because we live in such a busy, busy life. But I think we're kind of coming back to the table. We're coming back to the family, and we're coming back to what's important to us and what our goals are. So again, if you want to spruce up and find those found dollars to those financial institutions, now's the best time to do it. If you want to, just put in the comments, we can happy to send you what we call a budget analysis or a cash flow analysis worksheet. You can work off of it, plug your own numbers in there. You don't have to pay us to do it. And, just look at 2 months of bank statements, look at 2 months worth of credit card statements, and you'll really start to find out, gosh, what is my average? Because the money's going somewhere.
Right.
And when you can identify where it's really going, and you can see that, and you can start to create that account that you're going to set up at a bank where it's not normally a bank where you normally bank at. Again, tongue twister there, but if you're banking at Chase, don't set up your wealth recovery account at Chase. Maybe you need to send it. Maybe you need to, do it to a neighborhood national bank, or just a California Bank and Trust, or a different bank, right? But you set it there so that once you set it, it's going in automatically, and you're not as tempted to go and touch that money. Because if you're trying to truly recover wealth that you've been losing to financial institutions, now is the time to recover that wealth. Stay disciplined about it, because believe me, these financial institutions want your money as fast as you can give it to them.
Yeah.
The bank has their hands in that money before you even get to touch it.
Hey, Elisabeth.
Yes.
I'm just going to pause you for a moment. So your view might not be on the gallery view, but Mark, the gentleman with our first question, has joined us. And so Mark actually has a question. So I didn't mean to jump in there, but since Mark's been waiting so patiently.
Sure.
Mark, welcome to the conversation. What's your question?
Hey, good evening, everyone. I'm very high proponent of it, what Elisabeth is saying. I've been her client for, I don't know, over 10 years, probably closer to 20 years, but she set us up so that we have absolutely zero impact from what the stock market is doing today. We've gone through this in 2008 when our 401s went down to 201s, no impact. This is worse right now, quite honestly, and no impact again. So I'm sitting here high and dry and ready to go.
That's awesome.
Question, I've got two questions for Drew, and one of them is regarding refis, APR, minimum ROI to break even. With today's market, first, I know the interest rates dropped, right? I have two particular game plans. One is to refi this house, stay here until we figure out what the real estate market's gonna happen. Or plan B is to retire. And Elisabeth and I have been talking about this over many years, actually. All my family lives in Hawaii. So I could move to Hawaii quite easily, but it's high cost of living. I'm kind of gun shy, right? So I'm kind of tending to say, well, let's go to a low cost place. A lot of the Californians are moving to Henderson, right? So I'm looking and saying, okay, what kind of real estate trends has there been? Can we look at the 2005, 2008 for any guidance in terms of what the market might be like? I know this is all brand new. And then the other part of it is, you know, if I do refi, how many months do I look at? You know, do I need to look at 6, 12, 24 months as the ROI? Hopefully there's a no cost refi plan out there. The second question is regarding HELOCs. So I have a line. And my sister's just pulled all her cash out because she's gun shy. She's thinking with the real estate market dropping potentially, they might close your HELOC. It's better to have your cash where you can still get at it. And they have closed my HELOC before, back in the day when, you know, the market dropped and real estate values dropped. Okay.
James, what say you?
Yeah, so Mark, thanks for the questions, really thoughtful questions. So I'll speak to, you know, your refinance question first. You know, you talked about your ROI, and correct me if I'm, you know, misunderstanding your question, but I think, you know, for everybody on the call, what you're speaking to is, you know, is there a no cost refinance option available? Or if there is cost, what's my ROI? Meaning, how long does it take me to recoup that cost?
Right.
And what kind of savings should I be looking for?
Correct.
Okay, good. So typically, you know, you want to look at time, right? Like, how long am I going to be in this mortgage? How long am I going to have this property? And does the cost associated with the transaction, is that cost justifying by the savings? Let's say for simple math, it was going to cost you $2,000 to refinance a mortgage, and you were going to save $200 a month. So what you want to do there is 2,000 divided by 200, your break even is at 10 months. So then the magic question that you want to ask yourself, and I have all my clients at, is, am I going to be in this mortgage, in this property for more than 10 months?
Right.
Now, obviously that's a very simplified answer. You know, there's no inflation involved in anything like that, but it's a really good rule of thumb. And if you're going to be in there longer than that, it's probably worth considering. Now, on the no cost refinance transactions, you know, there's a couple credit unions in town that are famous for wallpapering buses and, you know, public transportation saying zero cost. That's all fine and good, but we all know in life, no one works for free.
Mm-hmm.
What they're not telling you
Really?
Yeah, what you're not being
for
told
free?
is you're paying a higher interest rate than the person who pays closing costs. So we come back to our math equation. Is a lower interest rate and $2,000 in cost, and I'm saving 200, worth it to me more versus having a higher interest rate, the perception of no cost, but higher rate, higher payment, just because we've been told that by the media or banks want us to believe that no cost refis are great. No cost refis, and the last thing I'll say on this, they tend to be a good strategy if you're going to keep the mortgage short term, you know, short term, 1 to 2 years, because paying cost isn't a bad thing because you're typically going to have a lower rate, lower payment, more of a longer term strategy though. And then you mentioned HELOCs, Mark. So I think your sister's a smart gal. I think you should give her a virtual fist pump or high five. I was in the market, when we went through this in 2007 and 8, and that's exactly what banks did, you guys. For everybody that has a line of credit or thought about this, banks literally, you'd get an email or a letter in the mail saying your home equity line of credit's now frozen.
Yeah.
And you're like, great, there goes my access to my $100,000. This is my home, it's my property, it's my equity. Don't tell me what to do, bank. Bank says, we don't care. So I don't want to panic anyone, but having that money now sitting in your checking account or savings account or invested with Elisabeth is a lot more liquid, and you have a lot more power and freedom than it's sitting there waiting to be used. Because with the equity line of credit, you can always pay it right back. You shouldn't pay fines or fees or anything like that. You should be able to just say, I don't need it anymore, and pay it down.
And as just to kind of tie into that answer on the real estate side, while I don't know that I would, in this market, depending upon, your sister's circumstance or whoever's circumstance might be watching this and thinking, that HELOC, gosh, I should pull all the money out, and then maybe I'll go and I'll invest that in something, or I'll buy some stocks, or I'll buy a piece of real estate. Well, I would pump the brakes before we jump into that. And for sure, if you're thinking about then utilizing the equity from your home to then make investments in the stock market, you would definitely want to double check that with somebody qualified like Elisabeth before you dive in on like a really good hot tip. Because my dad calls me with hot tips all the time. He's done very well in the stock market. I love my dad. He's great.
Well, just
Dads
know
are
this, because as a fiduciary of myself and just in the world that I'm in, if you were to take money from a home equity to invest in the market, it's not something I can do for you.
Yeah.
It's something that's completely
There you go.
off.
There you have it.
It's completely off the
Thank
discussion
heavens
charts.
you said that.
Yes.
Thank heavens. Yeah.
So
Yeah,
you can't
that's
put
what I was
something
hoping.
from an equity standpoint from a home into the market where there's no base to it. So it's not something that I would ever advise you to do. There might be people out there that might, but yeah, Mark, I wouldn't do that for you. What I would say is liquidity right now, even though it might bring your, that equity line of credit payment up a little bit, just that peace of mind that that you have it. And if you had to fall back on it, it's okay. And I know, Mark, and I'm not going to give away your personal story, but we've been working towards this goal of you being in full retirement and enjoying life. And you don't necessarily know right now whether you want to keep the home or move to Hawaii or move to Henderson. And those are all good things. You got to live wherever you're going to live. But I think even for James' question earlier, it depends on how long you're going to be there. And so that might have something to do with the pricing of what kind of mortgage you do too. But for you, it might be a good thing to clean things up that we've talked about.
Yeah.
Thank you.
So,
Great
Did that
question,
answer your
Mark.
question, Mark?
Yes, that was fantastic feedback. I made some notes, and I thank you. That's very
Perfect.
helpful.
Awesome.
thanks for
Great.
participating.
I'm just going to change you back to an attendee. So we will say sayonara for now, but you're still.
Thanks, Mark.
All right.
Appreciate you being here. Thanks for joining us. Kelly, do we have another question? Somebody else that wants to ask a
There
question?
is quite a few questions. If you guys want to bring on some more folks, there's, I
Come on.
think they're still there. Norman and Suzette. I think they
Yes.
might be clients of Elisabeth.
Yes.
So I did chat with them. I think they're still here. They said they might be. Oh, okay. Are they here? Let's see.
I see them. They're there.
Hi, Norman.
We see a picture.
Okay, there they
How
are.
are you?
Yeah, great. They have some
My wife is can't be here at this moment, but
Oh, well, tell Suzette we say hi.
absolutely, and she obviously says hello to you as well.
Good.
My question was, with the annuities I have, with all the annuity companies, we don't have to mention them. Well, we can.
I know which ones you have, and we can definitely talk more one-on-one about it when we meet next.
No, are you worried about all the payments they're going to be making with all the death is going on,
Mhm.
crisis? Are you worried about them going out of business?
It's kind of interesting that you say that, Norman, because I'm not worried about them going out of business, especially the companies that we have for you. But one of the companies that your wife has a contract with, they basically, they've actually waived paying premium payments for people that have hardship right now for the next 3 to 6 months. But even if someone didn't make a payment and maybe they went negative, something like this, they would still make those claims. They'd make those payments if someone died. But here's a story about insurance companies in general. They have to have a 10 times 1 ratio. So if you have, so a bank, just for an instance, a bank has to have a 1-to-1 ratio. Let's say they give you that mortgage loan. Okay, they have to have that much money in the bank to be able to pay, for that mortgage and for you to have that come back. But in insurance company world, they have to have 10 times that 1. So let's say it's $100,000. That means they have to have $1 million in reserves to back that up. Now, the companies that we've been doing business with for so long, they actually have more than just reserves, they have surplus. So the surplus is there to come in any kind of catastrophic event to be able to pay those claims too. But that's why when we look at any company that we do business with, we want to make sure that we're looking at the strength and the financial capability of their ability to make those claims and pay them as promised. So we don't want to work with B-rated companies. We don't want to work with negative rated companies. And in your situation for what your mix is, I have every confidence that God forbid something happened to you or Suzette or anyone else like in that line. And I do believe that they'll make those claim paying abilities. Now, I have talked with some of these companies and they have told me that there are companies out there they're a little concerned about. And so I would be lying if I didn't say that there's a concern for some companies out there. But there are the claims paying abilities. There's associations. So it's the Guaranteed Life and Annuity Association. Each state has one. It's kind of like FDIC for bank accounts. So $250,000 per account. So this is insurance that would come in to basically, if there was a company that went out of business. But again, in our history, in the last 350 years of all insurance companies itself, there's only been one company that's ever gone out of business, but then a bigger company came and bought them and continue to pay their claims. At the end of the day, who owns all the money? It's not the government, because it's the insurance companies. Everyone thinks it's the government. No, the government has the biggest debt on the planet. If FDIC ever had to get involved, we'd have bigger problems. But when it comes to insurance companies, they are in that claims paying ability. They've got to make those claims. I mean, just even for the state of California, it's interesting because if you don't make a health insurance premium right now, they won't cancel you. They'll pay your claims. If you can't make a car insurance payment right now, they'll make sure that you're still in effect to have your car insurance, because they know people for the next 3 to 6 months, it's going to be a completely different story. Right now, we're just dealing with the beginning of this. I think the harder point of this, until they really start to open the economy back up and we can feel that we're in a place of strength, we're going to be like 2 to 3 months from now trying to figure out how do we economically maneuver in this new world. And then, they say that we might be in, masks and gloves for the next 15 to 18 months. But again, are we all going to be adaptable and try to figure something else out to do? I have to look at the confidence and the claims paying ability of those companies and the reserves and also the surplus of those companies to be able to make their promises true. But yes, I stay away from the companies that I would worry about.
Okay, I got one other question for James. If James is about a mortgage question. Yeah. James, I have a 10-year. It's a HELOC. At the end of 10, I have 5 more years left. It's 3.375, and then it's a 30-year amortization. You think it's time for me to get that into a 15-year fixed, or should I wait?
Well, I mean, gosh, there's several things in that question, and Elisabeth knows your financial plan a lot longer than I do. I guess let me ask you this: is your concern the uncertainty of a HELOC?
The rates are so low right now, and I don't think they'll get much lower. In 5 years, I'm keeping. This is my life. This is my house. I'm done. Sure. In 5 years, I'm going to have to get a new mortgage, or whatever the interest rate is. I'm going to have to pay. So I think probably reasonable to start shopping it now, wouldn't you, or no?
So
I would.
currently it's set up, or Elizabeth, go ahead. You, I mean, you know.
I just said
Norman,
I
because-
would. I mean, Norman, this is a conversation we've had now probably the last couple of years, but I mean, if we kind of go back in time, and James, you can confirm this, but back in 2008 through 2011, interest rates were incredibly low. And you have so much equity in your home too, Norman. I mean, this is the time to start looking for these things. I don't know if you need to do a 15-year. I'm gonna leave that one up to you. We can have another conversation about that. But
I know you.
Yeah, I know.
You want a 50-year if it was you. I know you.
If we could, the house has no idea that it has a mortgage on it. If anything, I want you to maximize your mortgage interest deduction for your taxes. That's the reason I say like a 30-year. But you know, look at the info.
I'm gonna give him a call with the rates and see what price. But I think you gave me his number already. But okay, I want to thank you for having this. This has been great. And
Good.
Yeah, I'm gonna stay on for a little bit. But thank you, all of you, for doing this for us.
Thank you.
Norman, you're so welcome. And let me just, make a comment on that, because I think it applies to a lot of people just on the call in general. A strategy that I really like when you're considering, as we're getting older and we're looking at trying to retire a mortgage and
Exactly.
considering a 10-year, a good strategy is a 30-year mortgage. And if you want to pay extra on it after you've consulted your financial planner, you can do that. Most mortgages and most lenders and banks nowadays will set you up a mortgage that doesn't have a prepayment penalty. And then you're setting yourself up with a smaller 30-year payment. And now you have the choice. You're in control. You have the power. If you want to make a 15-year payment, you can do so.
Yeah, but with a higher interest rate, the 30-year is going to be.
But there, the gap right now is maybe a quarter, 3/8 on the high side. It's not as great as it used to be in the past. Yeah.
Okay, I'll consider it. Thank you.
You're welcome.
Cool. Thanks for joining us, Norman.
Thank you, Norman. Thanks for asking the questions.
Yeah, and we've got, next up we have Carlos Robles, who's a client of ours. He is going to join just via audio. So I am going to, actually, allowed to talk. Is Carlos there?
I think you actually may have misassigned that.
Oh.
Let's just see here. There he is. Hang on.
I did.
Okay. Carlos,
Sorry
you're unmuted. How's it going?
Hi guys, how's it going? Pretty good.
Hey, good to talk to you. How's Marina?
Fine, thanks. How are you?
She's right here with me.
Oh, awesome. You're both here. That's great. What's your question?
So our question is right now a good time to refinance our home? We've only been here for what, 4 or 5 years?
5 years.
5 years.
5 years.
And yeah, we're just wondering, should we do it? And if we should, we started the conversation with the whole Rocket mortgage thing online, but we're not really sure if that's even legit or a good idea. So we're just here, what do you guys think?
Well, can I jump in first, James? And then
Yeah, please.
Technical stuff from you. So first off, I might be partial, but I think that James Carmody, or really, any one of my preferred lenders, is going to do a far better job for you than Rocket Mortgage would. Quicken is a fine company. They, Intuit, their whole, that whole suite of services that they offer is really lovely. But they didn't start as a mortgage company, and they don't know mortgage like somebody that's been in it for as long as James has been in it, or as long as any one of my, partners have been in it. I also just kind of feel like, to back up for a moment, I just think, for anybody else that's out there that's thinking about refinancing or doing anything in business, I think this is just one of those eras that, for me, I don't know how you feel, James or Elisabeth, or you, Carlos and Marina, but I really love being able to pick up the phone and get somebody on the phone that knows me and that's going to advocate for me. Like, when this whole thing started, I'll give you an example, before the order came out or anything like that, I just kind of saw the handwriting on the wall, and I literally walked in to my banker's office over at Comerica, and I sat down, and he's like, Drew, you never come in here. His name's Alfonso. He's with Comerica. He's great at their downtown branch. And I said, listen, I said, I don't mean to sound like a crazy person, but you're about to get on the phone with the SBA and you're going to get me forbearance on these business loans because I'm not making the payments. And the other thing that you're going to do is you're going to give me a check right now because I'm going to write out all of the money for my HELOC. So I won't share with you all the gory details of all the actions that I took to forestall and, you know, really shore myself up financially, you know, unless you've got specific questions about that. But my point is this: what made the difference was that I could walk into Alfonso's office and make very polite demands of him. And it gave me peace of mind. It got him in action. It allowed him to go and advocate for me. So I think for anybody that's thinking about refinancing right now, you know, I would certainly advocate for you to work with somebody that you can actually shake their hand virtually, like James. And then diving into the details of, you know, should you refinance? I don't really remember what your rate was. Maybe you can share that. Do you know what your rate was? And that was 5 years ago now, so it was.
Yes, I think right now we're at 4.80 something. It's, yeah.
Yeah. James?
Yeah, Carlos, great question. And, you know, and Drew asked, you know, the important one first is, what is your current interest rate? Because, you know, if rates were at 4.7, we don't want to just refinance. We want to know, like, okay, is there going to be really big benefit? I can confidently say without a doubt that unless your credit's in the 500s, you're probably going to get an interest rate 1% or lower than what you currently have. You know, depending upon the type of loan you have, the type of loan that you're qualified for, you can probably lower a percentage or more. The thing you want to look at, and, you know, we spoke to this with Mark a little bit, is what's the cost associated with said new mortgage, and how much will you save, and how long does it take to recoup it? You know, I'm happy to have a conversation with you offline, and we can talk about, you know, what is your exact balance, what type of programs are available to you. But odds are at the 4.8 something, you can probably acquire another 30-year fixed in the 3s and save yourself quite a bit of money.
Can I add a couple questions to that, Carlos? Do you mind?
Yeah, absolutely.
Okay, so Carlos and Marina, nice to meet you virtually. But one of the questions I always ask, and I don't know if you're working with a financial advisor that thinks like I do, or if you've ever worked with someone like this at all, but when someone goes to refinance, this is a logical thing that they say, I want to save money. So let's just say you would save $500 per month or $600 per month, and that you wouldn't be paying to a mortgage company, to that financial institution anymore. What would you do with that $500 or $600 a month?
That is a great question. We don't know yet.
See, this is where, if you're not having it go to a purpose, if you remember when I talked a little bit earlier about that wealth recovery account, because is it your goal to pay off your house as fast as you can? Or is it just your goal to have the lowest interest rate and you could care less if you pay off your home? So I'll ask the question several times to people, and I'll say, well, if you refinance to save money on your mortgage, where are you saving it? And pretty much almost 100% of the time, people will tell me, well, what do you mean I'm saving it? And I go, well, where are you saving it? What account? And then it's always this deer in the headlights look, and they're going, oh my gosh. So if you don't have a purpose for that savings, you're really hurting yourself. So don't hurt yourself. Create a wealth recovery account in another bank and put that savings in it, because if you really want to pay off that mortgage even faster, if you save that, let's say $500-600 a month that you save, each and every month, you could probably pay off your 30-year mortgage in about 13 years.
That sounds amazing. Let's talk more offline.
It's true. It's true. Yes, we'll be happy to. I mean, Drew, if you want to send me their information, we'll be happy and honored to talk to you about it. But I hope that that kind of rings some bells for a lot of people listening, because we can refinance to save money all day long, but if we're really not saving, we're stealing from ourselves.
Yeah, and I want to underline that, you guys, like what Elisabeth just said is one of the most powerful points on this conversation so far, is when we have an opportunity to save money, whether it's refinancing or, you know, cutting our utility bill in half, having a plan what you want to do with that extra money is so critical. and not just, throwing it to chance and putting it in our, big bank savings account at 0.00001%, but having a plan. So yeah, I think it's very valuable information.
Well, and what happens with most people is that they'll just absorb it into lifestyle and they'll increase their lifestyle, or they'll go find something else to spend it on.
Yeah.
But it's true. I'm not trying to call anybody out, but everyone's guilty of it. You say if you did it, you just saved it for something else to enhance your life that you basically are out of your means with too. So I think now it's the time to be extremely just really conscious of what we have the ability to to leverage our money with. If we're going to save money because we think logically, we're told, gosh, interest rates are lower, we'll save the money, save the difference, beat the financial institution, make something with it, create wealth with it.
Super great. Awesome.
I agree.
Carlos, did that give you everything you needed?
Absolutely. Thank you guys so much.
You're awesome. I'll get you connected with Elisabeth after this.
Cool. Thank you.
Okay.
Awesome.
I know Kelly has a bunch of
Who's
people
next?
that have.
There's a whole list on the side there.
I know. It's like.
Okay, so
Exciting.
I wanted to invite Linda Morrow to ask her question. I don't know if she saw my chat, but I'm going to just promote her here since she said she was happy to share earlier.
Great. And then you can just invite her to share
Yeah.
a video, and there you go.
The start video.
Linda.
Hey.
Okay.
Hey, Drew.
How's it going, friend?
Good.
Good to see you. You're a little sideways for us.
We'll go like
How
this.
about that? Is that there?
Oh,
Oh,
that's better.
that's
There
like
you go.
way better.
I have my iPad, so I was trying to figure out which way the camera was pointing. Anyway, great. Thanks you guys for doing this so much. It's been really interesting to listen to everyone. So Drew, I'm going to ask you to look in your crystal ball there and tell me what's going to happen to the San Diego real estate market over the next 6 to 12 months.
It's going to go up and it's going to go down and it's going to go up and it's going to go down. No, but really, that actually. So my prediction is just a healthy amount of volatility,
Okay.
and I'm basing that on the information that I'm getting from economists that I respect that look at specifically the San Diego market. I'm basing that looking at what has happened in my business as a microcosm and the kind of conversations that I'm having with the sellers and buyers that I have worked with over the last 6 months and that are in the pipeline to work with over the next 12 months. And when I say I'm basing it on my conversations with them, like I measure things like, well, what's the continued appetite for purchasing out there? And although, yes, my business does not have the entire San Diego market in it, I do enough business that if I actually interview all of those people, find out where they're at versus where they were, I'm going to get a lot of insight into where the consumer is and therefore where the demand is. I think to get it a little bit more granular, but to maybe put some meat on it, for sure right now supply has decreased, but so has demand, almost at the same pace. So we're right now in this moment in time, properties that are between, we'll say 0 and 900,000 that aren't in downtown, meaning 92101 vertical living, that are outside of downtown, flying off the shelf, multiple offers, so long as they're priced properly. The price space that's above $900,000, that is a little bit of a different animal, and that has a lot to do with that right now. James can speak more about this as well, but right now there's this constraint in jumbo financing and that there's just not a tremendous amount of liquidity out there to fund those loans. I mean, when the proverbial poop hits the fan, the banks all of a sudden, they just get a little bit more conservative with who they're going to give the money to. So to be clear, it's not that they've stopped lending. It's that, to quote something you said earlier, James, and you'll forgive me if I'm inaccurately translating the situation, but James and I were on a call earlier with a whole host of agents that we do once monthly together. They're just not granting exceptions. So the files that are clean, like squeaky clean, it's very obvious, so-and-so earns X money, blah, 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 they qualify, boom, we're still going to issue that loan. but the files which they require a little bit of explanation, they're not necessarily going to be able to get jumbo financing at this time. So that's why that sector of the market, I anticipate, is going to see just a little bit of volatility, a little bit of, and when I say volatility, I mean like start, stop, start, stop, start, stop. And that's all going to be predicated on things that we can't predict, like how are people going to react when the stay-at-home order is lifted? How are people going to react as the stock market either rises or doesn't rise? Many people are using their investments as a source of down payment. So, I think it's all just a little bit too early to tell exactly what direction we're going, but I think the rest of this year, it'll be, that portion of the roller coaster where it's not where you're going up and then you go down, but where then after that first, big thing, like it's the portion of the roller coaster where we're like, we're kind of gliding along there and we don't really know what's going to happen next. I think that's just where we're at. And I think that's all I can predict. There's a lot of people out there that are saying, really scary things, but what I think they're missing in that conversation is that ultimately the real estate market before COVID-19, in what I'm calling the BC era, before COVID.
I'm so glad you said that. I was going to pull it out, but I'm so glad you said it. It's so funny.
The real estate market BC, it was strong. It was strong. And I don't mean just strong, like hyperinflated and everybody's, making silly choices. No. We had a certain amount of supply, a higher level of demand. I believe that those two pieces are not going, the supply piece certainly is not going to change because it physically can't. And I think we're still going to have that kind of demand. So if that makes sense, the only thing that then I can predict is because we don't have lending that's been going on with poor underwriting practices for a long time, we're not sitting on a pile of bad debt that is all about to turn over like we did last time. So that's some of my kind of colloquial evidence for why my prediction is that it'll be more of the same for a bit this year. And then there likely will be a degree of appreciation. And we saw that, although I wasn't around, I'm told that in, I think it's 4 of the last 5 recessions or 3 of the last 5, we actually saw a pricing appreciation in the real estate market. I certainly wasn't around. I think one of them was like in 1981, but.
Well, it needs to happen. Drew, it needs to happen. Pricing has to go up. That's why the market had to go up. I mean, the cost of living, everything, cost of goods sold, it's going up. So housing prices have to go up, especially in California. They have to go up to keep with that. And I think that there will be more of a demand because there's less inventory. But it'll be the same thing, right? They'll go back and forth. But I think it's interesting. And James, I'd love to hear your take on it when it comes to the tightening, because in the financial world, we always talk about banks and the tightening and economic downturns like this, that they get a little bit more picky. The money's there, but they get a little bit more picky and choosy about who they want to do business with. So I guess that there would be even a drag on approvals, and it might not be a 21-day approval or a 30-day approval. It might be longer. I don't know. You're the expert there.
Yeah, well said. And first of all, Drew, I think you answered it perfectly. It all starts with supply. It all starts with supply and demand.
Don't quote me.
And well, in my personal business, I'm experiencing the same thing. Literally, it's different this week than it was last week, and that it was 2 and 3 weeks ago. As a lender, we do a lot of pre-approvals. We're seeing people coming in and applying for these mortgages, and that sector 0 to 900 is still very, very active. Very, very active. And once you get above that, it's less active, and it'll be interesting to see how that unfolds over the next 6 to 12 months. What Drew started to speak to was jumbo loans. So a jumbo loan is a loan over 700,000, and you used to have all these investors in different banks that would make a jumbo loan. Well, about 10 days ago, Wells Fargo, who's is kind of like the 800-pound gorilla in the mortgage space, came out and said, you know what? We're not going to do jumbo loans with brokers anymore. We're not going to do jumbo loans for correspondent. We're just going to do them for our customers that come in through like the retail channel. And that put a shockwave through, mortgage lending through our industry. And now you have other jumbo lenders that are saying, yeah, I think we're going to put a pause on things, or they're going to tighten things up, meaning require a larger down payment, a higher credit score. And I think that's all fine and good. What we're seeing is 20% down minimum, people putting 10 or 5% down on jumbo loans. That's essentially gone for the time being. And having a credit score in the 600s is now no longer applicable. You're seeing above 700. And I think that's just common sense. Like, yes, I'm one of the owners of my company, but if I'm making a loan to Elisabeth, just a personal loan, I want to know, does she have good credit? And what's her skin in the game? Is she putting some money down here? And are we in this together? Are we partners? So I think we're getting back to a little bit more of the lending that makes common sense. And we'll see kind of how that moves forward.
Well, and Drew, that's going to be up to you to help your people like Linda, if she's buying or selling, to find the right person who's the best qualified person that has the best story to be able to convince you that that's who you'd want to go with, right?
So Drew, I have to say I'm really happy we didn't buy that house.
Aren't you happy you didn't do that now?
Yes.
Yeah. You've got to make decisions based on instinct, and that wasn't, going to be a good one.
Yeah, no, it was really, and the other, you guys can all applaud, the other little bit of good news is our house in Sacramento is paid off as of March 10th. So
hey, congratulations!
Congratulations!
Yeah,
that's cause for celebration.
First house I've ever gotten paid off. So we have stable renters who have jobs, and so fingers crossed, everyone.
Unbelievable.
Yeah.
Did that answer your question, Linda?
It did. Yeah. No, I mean, I think it's hard for any of us to imagine what the world's going to look like 6 months or a year from now, and it's all speculation. People keep saying there's no chance that the world's going to get back to normal, but we've been through the last pandemic was 100, serious pandemic was 100 years ago, and it's not like we aren't shaking hands in 2020 or weren't before the pandemic. Right? Mm-hmm. So I think we need to take the long lens on this, and humans are amazingly resilient. Although the planet, I think, is thankful that we're all indoors these days. But I think humans are resilient. We're all gonna get through this.
That's so well said. So well said. That anybody would say that it's never going to get back to quote unquote normal. Well, things are going to be different. For sure. I think we as people will have a conscious collective understanding of that. This is something that we actually need to be thinking about as a world, as a society. And I think that things like what you just said, the planet might be a little bit safer with us all inside. I think there's going to be a big move to green energy and things like that. Look at the skies over LA, but we are a resilient species. We seem to have survived this long. I'm pretty sure we're going to survive this. Yeah. Cool. Thanks for joining us.
Yeah, no, thank you very much.
Really appreciate it. Great to see you. Give Rob my best.
Thanks, I will. Bye.
Okay, Kelly, who's next?
We have, next I am bringing on Scott Payne. If he is still there, which I think he is. Yes, he is. Scott, I am bringing you on now as a panelist, and I'm going to unmute you so you can ask your question. Are you there, Scott?
Yes, hi.
Hi.
Good evening, everyone. And again, I want to reiterate my appreciation for everyone taking their time to do this and kind of be part of the collective conversation that I think we're all going to continue to have on many topics as this moves forward. My question is, and I think several of you, including Elisabeth, have touched on it throughout the last hour, but I was starting to work with Drew to purchase a home, and I was really excited about that. my portfolio had been higher than it had ever been before, and then all of a sudden things went a little sideways. And so I want to still be able to partake in the opportunities to buy a home, but what originally was going to help supplement the down payment has been decreased. And as anyone knows that is in stocks or has a portfolio, you don't lose it until you cash it out. And so I'm trying not to cash out until we have more of a recovery. So I guess I'm grappling with the fact that interest rates are down. It may be a great opportunity more so to purchase, though Drew was just alluding to the fact that there is a little bit of a demand, a demand issue where there's still lots of demand for the few properties that are around. What's the balance here? And what would someone like me begin to start to consider other than starting to save my pennies from my normal paycheck so I don't have to potentially cash out on things? And as Elizabeth was saying, never reclaim those dollars as time goes on.
Who would you like to have answer that question first?
Whoever wants to.
I want to hear what you have to say, Elisabeth, because I'm fairly confident. I know I have a couple things I could add, but I think you have a bigger perspective on how to respond to that.
Well, I appreciate that. Thank you for your confidence in me. But here with this, Scott, this is the big thing. You know, are you buying a home to have a home, to live in a home for a long period of time? Or is this going to be an investment purchase?
It would be, I'm like the gentleman said earlier this morning, I'm 54 years old. This is it. Like, I want to buy my home and be done with it. You know?
Okay. Well, see, then you know, this is the conversation to have, because when you're buying a home to live in it, to be in it, to stay in it, regardless of what happens with the market, it really doesn't matter. I mean, that's one of the ways to look at this. Now, some of the pricing, and James would be able to say this as well. Yes, I mean, when we talk about, I'm going to kind of retract. When we talk about paper losses are real losses, but they're not losses until you actually realize them and sell them, but they're still real losses. And I think that's where we sometimes get into this place of saying, I'm going to wait. So when we kind of started this, I made a statement and I said, well, if we're waiting for things to kind of get back to normal or even flat, we might be waiting a really long time. And so with that waiting of a really long time, what opportunities might you have missed out on? You know, maybe the pricing might be a little different right now. Maybe you might be able to get something for a better price just because of all this, and someone might be very motivated to sell, so you might be able to get an opportunity there. And it depends on how much money you want to put down. So James, are there any opportunities that it's not just 20% down for a first-time buyer or for a, you know, initial buyer? I know that there's kind of like a period of years that you become a first-time buyer again, even if you've bought before. But there's also some other opportunities too, where it's kind of interesting because there's this thing called the CARES Act. Okay, so we've had 3 stimulus packages and a 4th one on the way. And they're opening up money that wouldn't normally be opened up for someone that's 54 years of age. So it's a possibility you'd still have to pay taxes on it, but you wouldn't have penalties that you may be able would be able to go into, like what we call qualified accounts, which is your retirement accounts. And those retirement accounts you can actually open up and take a withdrawal, not a loan, but you could take a withdrawal. And loans used to be up to 50,000. Now they've actually put the loan piece up to 100,000, but they've also opened it up that you can take money from an IRA, from a retirement account at 100,000. You still have to pay, you know, you still have to pay the taxes on that, but there's even a lot of different things that, you know, these CPAs are telling us that you might even be able to extend tax paying back over time, not just right away in the first year, but you wouldn't have to pay that 10% federal or 10% state penalty, which would basically hinder you from doing what you want to do. So there might be some amazing opportunities for you, but I see this in a couple of different ways. You know, like I said, my son's on this call. He's 22 years old and he wants to buy real estate with really great opportunities, right? This is his dream. In your world, you want to buy your home that's going to be your home and kind of like the home and just be done with it, right? So we will have market ups, we will have market downs. You know, interest rates will go up, interest rates will go down. But in this scenario, if interest rates are at this really low place to start, you probably can buy a little bit more home than you could if interest rates were higher. And, you know, think of it like this. Is it a real conscious decision? Is it something where, you know, that's what you love and you're going to stick to it and know it's a long-term commitment? Because, you know, once you kind of start it, it's going to be probably 30 years in your life, if not more. If you refinance, it's going to be longer.
I'll be dead.
But then it's looking at your true investment structure to say, okay, if I'm waiting for it to get back to that one place again, that plateau, again, if we're waiting way too long and we're not patient for it, we're going to miss out on opportunities. But at the same time, is now the time to kind of restructure and look at what your risk ratios are in there? Because kind of interesting, we haven't gotten to this part of the conversation yet in tonight's talk, but where do we see even the stock market? Well, we're just finally starting to hear a little bit about first quarter earnings. That's going to have a little volatility. It has had a little volatility in the market, you know, this week. Not drastic compared to the new normal with the market, but where I think we're going to have our bigger earnings crisis is at the end of the second quarter. So I see that we're going to have nice positive, you know, growth, if you will, or, you know, recovery until the end of June, but we're going to be hit pretty hard at the end of June. There's just, we're going to have this kind of like, you know, seesaw up, down until it kind of stabilizes and goes back up to become a bull market again. Again, when do you want to be a homeowner? When do you want to have control over what your investments are doing? And when do you want to basically take the risk portion out of not having all the volatility that you're exposed to? You're 54, you're ready to retire eventually too. So I don't know what you do, Scott, but this is how, if you were my brother, I would be kind of talking to you down that road.
I work for a hospital. I'm a psychologist for a hospital, so I have a stable job.
Good, good. Well, what I do literally is money psychology. It's financial behavior of what we feel. We have fear against it and everything like that. So people ask me, well, are you kind of like a money therapist? I said, pretty much. And we talk about these things. We have anxiety. We're anxiety driven about money and everything else. And it's we can choose to live in anxiety and fear, or we can choose to have opportunity, growth, and feel confident about our situation.
Exactly. And I do believe in that, and I appreciate you saying that, because I talk about fear versus confidence all the time. And I think it's one of those things that, especially when it comes to your finances, you're always worried about making that decision that you're like, God, if I had only just waited, or why didn't I do it at that time? And I appreciate you saying that, because I think there's an amount of fear that we have to just let go of. Yes. And I do it in other areas of my life, but for when it comes to the financial home buying, because of my lack of knowledge, I definitely operate in the fear realm. So I appreciate the conversation right now.
Well, we all have to have a place to live.
Yes.
And if it's the one that you really want to be in, then it has no effect of what the market's going to do.
Great. Thank you. Thank you, Elizabeth.
You're welcome. But James, maybe you can
another point to underline there. You know, first and foremost, your home is where you live. Yeah. The investment is second. You know? So, I mean, in just to, you know, Scott, as far as down payment and things like that, I don't know what your price point or what you're looking at, but there are programs where you can do 5% down, 10% down. Typically, they're in the, you know, mid 700s and below that afford those lower down payments. And then even into $1 million, you can split up that 20% down on the jumbo piece. Above that, you know, then it's for sure 20% down. So there's ways to look at it, but my advice, you know, first as a person would be sit down with Drew and talk about, you know, what are your real wants and needs, and look at, okay, does this make sense for me? I'm 54 years old. What do I really want? Because that fantastic property that, yeah, maybe you give something up on an opportunity cost in the stock market or somewhere else, but your dream home could come on the market tomorrow and you may miss it if you're sitting there saying, well, shoot, I've got a loss in my GE stock because I bought it the right. You know, I'd be looking at it more of like a lifestyle and, you know, enjoying yourself, and where do you want to live first? That'd be my advice.
Great, thanks. And I do have an appointment set up with Drew on Monday, so we're good.
Sure do.
You need to look good on paper. We're happy to help you too.
Oh, okay. I thought you were going to say I need to look good on camera. So,
you look
I'm
great.
looking pretty rough. Thanks. Thank you.
It's good.
Thank you so much, Scott. Thank you so much.
Thank you. Thank you, folks. I appreciate it.
You're welcome. Good luck to you.
Awesome. So just to kind of, wrap up here, we do have one question from Ahmad that is directed towards James that I don't know if it got maybe halfway answered, but I just want to make sure that he gets his answer on the Q&A. James, he said, James, do you believe that from now the loan requirements might make it harder for buyers to qualify, and how will it be different from today?
James, are you frozen?
I think so.
Might be frozen in the garage.
Froze. Okay, got it.
All right. Well, I can try to expand on what James said a little bit earlier. So for sure, lenders are tightening in the requirements. The lending guidelines, as far as I'm aware, Ahmad, haven't actually changed. Oh, good. James is back, so I don't have to pretend that I'm him. Very good. Hey, James, are you back?
Back. Technology in the garage.
No problem. While you're getting your camera back, could you answer Ahmad's question? He wants to know, Kelly, could you ask that question again?
Yeah, of course. James, do you believe that from now the loan requirements might make it harder for buyers to qualify, and how will it be different from today?
Say that again, please.
Sure. James, do you believe that from now the loan requirements might make it harder for buyers to qualify, and how will it be different from today?
Great question. So guidelines and how it pertains to buyers qualifying in the future.
Yes.
I think we're getting back to a little bit more common sense. If you're buying a jumbo property, you're buying a property $900, $1 million, $1.5 million, $2 million. My personal belief is you should have 20% down, and you should have at least a 700 credit score. You should demonstrate that you are a responsible financial person and a responsible borrower. What we've seen go away over the last 30 days are the 500 credit score, 0 down, 580 credit score, 3.5%. Personally, those people shouldn't be buying properties yet to begin with, because they haven't demonstrated that they can pay their bills on time. So I think we're getting a little bit back to a little bit more common sense and a new normal. Now, we are nowhere by any means near what we went through in 2007, 8, 9, and 10, where banks just closed overnight, programs just went away. Like, we're not even close to that at all. We're getting back to a little bit more common sense, a little bit more logical, in my opinion.
Awesome. Thanks. Well, I'm sure that fully answered his question, so thank you so much. So we're kind of winding up here. We've got a couple more. Some of these folks aren't actually here, but they asked these questions prior to the webinar, and I want to make sure we answer them so they can watch the recording. One question was asked by Peter, a client of ours, and he said, and this is kind of posed to all of you, how are you helping your clients calm down?
I can answer that very briefly.
Okay.
I think, it's conversations. I have the way that I have found myself to be most useful over the last however many weeks we've been at this is when I've been on my headset, on my cell phone, walking around my backyard on the phone. I think if there's anybody out there that is at all nervous or scared or doesn't know what to do, whether they're a small business owner or an employee, whether they find themselves unemployed or whether they find their client pipeline completely dried up with no income coming in, they can call me and I'll talk to them. And generally at the end of a conversation, people have calmed down quite a bit.
Right.
And I don't want to answer for Elisabeth or James, but I imagine they'll say much of the same, and maybe they'll give some more specifics. How about you, Elisabeth? How do you calm your clients down?
Well, it's been a very unsettling, but we have to be calm. I have to be confident. We've been having meetings around the clock, and just to reaffirm their situation. And first and foremost, it's asking, how are you? How is this affecting you? One of our clients, she does corporate events, and she's probably hit the hardest right now because no one's traveling anywhere. And she's someone that does an amazing amount of business each and every year, and a lot of different people that work with her. And now she's in a position where, wow, how long do I have to now wait for retirement to come? Because the first goal was within about 4 to 7 years. And now she's thinking it might be 10 to 12 years. And we don't want to get ready for next 10 to 12 years and have this happen all over again. But she's also being very resourceful. She's doing events like these, which are pretty amazing. But I think it's just being that genuine person and asking people how they are. And I'm, with Katie, we are around the clock on appointments. I mean, we've been working since early this morning today, meeting with people, and we are constantly trying to make sure we're accommodating everybody that wants to talk with us, and just letting them know that we're here. We haven't disappeared, which that could actually happen. People could just disappear and they're not going to want to talk about these things. But being a sense of calm and confidence, and know that the structures that we've put into place are there for their protection, and now they're being triggered, and it makes a lot of sense. But just that peace of mind. And I want to kind of, go back to Norman's question about the financial strength of these companies, about having to pay all these death claims or whatever it might be. It's something that we will get through. There may be some companies out there that might not, but I have the confidence with the companies that we vet out that we're not going to have those problems. And if so, there's backups. And I don't think there's going to be a backup situation like this. But I think right now everybody has their own concerns. They might know that everything's okay, but if they don't have a job, or they're filing for unemployment, or they're a small business and they're looking at opportunities for some of the SBA disaster loans or CARES Act Paycheck Protection Program, because they've been impacted by the economic decline that we're in, I want to be that resource. And a couple of my clients right away, when this all came out, they're like, can you please research it? I'll pay you for it. It's fine. I don't have time to research right now because I'm dealing with all my crisis with all my clients. And I think if we all work as a team, and I think that's why we all agreed to be a part of this, that this gives even peace of mind to the people that are listening or watching or going to watch the recording. And I think it's something where it's pretty fantastic that this is a voice that they get to hear. And being that sense of calm for people to be able to say, can I throw this question out at you, or can we talk about this, or what does my situation look like? Am I being affected negatively? And when we get to have the good story conversations, it's such a relief. The good story conversation is just amazing. And I can say, and Katie can attest to this too, every conversation we're having is a good story conversation. But the masses of the majority of people out there are not in the good story conversation. They're down with the 37% that the market went down. They didn't get to recover quickly, or they didn't get to protect their monies, fast enough, because they just were thinking that this was a market that couldn't stop. Every time we've had a market decline, whether it was from 1999 to 2000 or 2007 to 2008, everyone thought, oh, there's no way that it can go down. This is another economic impact that it can go down. So it's just to have those conversations, and people that are on the fence about saying that they're not sure if they're ready to talk about their financial situation, right now is the most, and I'm not going to just say pun here, but I guess I will, but it's the drop dead time to make sure that you are talking about your financial situation, because you don't want to wait for this situation to get worse. And if you can do anything to protect, or even put a plan together, or just like I said about when you refinance, where you're going to save the money, be conscious of it, save it. Win back the money from the financial institution. So just these conversations, I think this video conference that we're doing right now, I think is amazing too. And I think we're talking to a lot of people that they just didn't even think that there were opportunities or possibilities or comfort for them.
Awesome. All right, cool. Well, James, I don't know if you want to add anything there. We have one last question, but feel free to add anything there if you've got anything else.
I'll add something, a couple of things briefly that were touched on but weren't said. First, I think in both Drew and Elisabeth said this, is being in communication, raising your hand and saying, hey, I'm nervous, I'm upset, or I'm anxious about X. Get it out of your head and communicate it to, someone in your house, or someone else, or your financial planner, or your realtor, or your lender, someone else that can have you be heard. First of all, let's just be heard with what we're dealing with. And then second, focus on what can you be grateful for. And that's typically things that are within your control. I record this from, my humble garage. I can be grateful that I have a garage, and I have a roof over my head, and I have food in my refrigerator right now. And there's a lot of things out of my control, But today I choose to not focus on those, and I focus on what I can control. And I think keeping it simple like that really, really has people have their minds, including my own, at ease.
Yeah, I think that's really great. Awesome. Okay, so the last question we have comes from our dear friend Joanne. I'm going to ask it on her behalf because this is not only about business. We, want to talk about everything. She would like to know your tips on how can I keep the romance and love alive between myself and my partner that I am quarantined away from. So even if you're not in that particular situation, you might have something you could give her.
I love that question.
Yeah.
Drew, I am sure you
I
have
think,
something.
James, you are the most qualified person to ask that question right now since your wife just had a baby.
Well, so I'm quarantined.
When you're quarantined away from him.
I know. So yeah, so how to keep the romance alive when you're quarantined away from your partner. I have the opposite in that, I am quarantined with my wife. It's a little bit different in that we have a newborn. So that's, impacted our romance a little bit, and, things just look differently in the near term. So I don't know if I'm the best one to answer that. I think it all comes back to communication, and speaking, what are your wants? What are your needs? And having them be heard, and asking your partner, what are their wants and needs, and being okay with kind of this new normal. And I think the new normal conversation can be said for anything. Having realistic expectations and standards about what we can and can't do right now. And being real with ourselves and our partners about what's possible and what's not.
Yeah. Elisabeth, you have anything? I have a few thoughts.
I think you should start. Yeah.
Well, not to turn the conversation in a completely different direction, but one of the benefits of this world that we live in is that we do have this ability to be face to face, although not in person. And so, I think that there's lots of really creative ways to keep that physical romance alive when you're not necessarily in the same room with the other person, as long as you can have some video going on. They used to do these things called, like, you'd have like a creative phone conversation with your partner when you were in different cities. Now we can have a creative FaceTime with our partner when we're in different cities. So, maybe I might offer you that if you haven't already thought of that. And I think what James said also is just so on point in that you've got to be really clear about what you want, and you've got to be willing to say that. More importantly, you've got to be willing to ask your partner what it is that they want, and you've got to be willing to hear it. Because they might not be cool with being separated. Mm-hmm. They might be like ready to move on. They might just really need to spend some time with you every evening before they fall asleep. Maybe a little FaceTime on the pillow, like Arlen was on a cruise ship without me writing once. He went on a like a writing lockdown on a cruise ship, and he really didn't actually call me during this, but like he would record these little videos of himself like falling asleep. It was the cutest thing, and then he would send them to me when he was like in port, just as a way to stay connected. So I don't know if that'll make any difference, but
I'll give you something that I know of. Some friends have done this because the husband got coronavirus, and so he was basically sequestered in the bedroom, and his wife, this is funny. Okay, so he would call her Nurse Ratchet. She would bring his meals to the door, put him on the floor, knock on the door, run away. So she was far away when he would open the door, and make sure that the dog wasn't going to get the food. And she would put these little sticky notes on the door with little messages. And then he would have sticky notes in his room, right? And he would write these little sticky note messages. And it was just so cute. And he would send a picture of what he was doing, and then she would send him pictures of what she was doing with their son, taking a walk with the dogs. But then they were communicating and doing these things. And then finally, when he could literally leave the room to go for a walk, it was the most amazing, excitement for both of them, because they could actually interact with each other again. They could be close to one another. They both felt safe. And their relationship, I would say, just by seeing this little love story on Instagram or Facebook, it was so sweet because that's what this is really all about. If we are in love with our partner, then no matter, you know, if there are miles between us or if it's just a door, we will, if we are smart about this, we will focus on our relationship even more, and we'll be that much more grateful for what we have. And whether it's little sticky notes with, you know, little writings, or, you know, gosh, just say, hey, take care of yourself, or I love you, or whatever it might be. This gal that I know, her name's Rhonda, she got so many people involved on Facebook that they started bringing baskets of things or food or just games that he could play in his room. And I mean, it was hysterical, but it was all out of love. I think if we come to another place in this in time, when we come back and look at this, we're all being back to our homes. We're being back to our spending time with each other. We're coming back to the table and having dinner possibly with each other, where before we're going so fast. This is a time of love to be really reconnected with one another.
Awesome. Well, I think that is definitely really good advice. And I will say also, Joanne, Scott Payne, who we talked to just before you, the hospital therapist, sorry, I don't know if you're a psychiatrist or psychologist, he put a comment on here that says, lead with kindness and be forgiving.
That's awesome.
So you can use that
Beautiful.
too.
That's awesome.
Yeah, awesome.
Wow, this was amazing. Elisabeth, James, I had so much fun doing this with you. Did you guys have fun?
I had a great time.
Do we want to do this again?
This was great. I didn't,
I think we
have
should do
certain
it again.
expectations,
Yeah.
but this was awesome. And we had over 30 people come together and share what they're dealing with and ask questions. And I absolutely loved it and definitely want to do it again.
Great.
I just love how genuine it is, because people are asking things that are on their mind and they want to talk about it. I think we need to maybe have another professional or two on with this too, just so we have even more voices and more people coming together.
We didn't even get into like the SBA stuff or the PPP,
I know.
like those things, which are definitely on people's minds.
Mm-hmm.
Yeah. You want to maybe throw out another date now, or we'll just get back to people with that. Maybe
We can get back to people with that, whether they want to talk to us and see us again in a week or in 2 weeks or whatever that might look like. But I think we should come back.
Great. Okay.
Yeah, and Drew, do you have something around like questions, survey, calendar, stuff like that?
Yeah. So for those of you that are watching, first of all, just gosh, thanks for hanging out with us for the evening. We really appreciate it. This has been super fun for us. It's given me purpose. It's definitely filled me up, to be able to, share with you. So thank you. If you heard something that you want to follow up on, or you'd like more information, or you'd like to have a conversation with, myself or James or Elisabeth, you will either get a follow-up survey automatically that's going to have links for you to be able to schedule with us one-on-one. It'll make it really easy for you. Or we'll send out a manual email to everybody because the automation might not quite work right. So just look for that. And also, I'll have Kelly actually put those links in the chat right now, so that if you're dying to get scheduled, you can get that done right now.
Sure.
So Kelly will go ahead and put those in the chat before we close. And, I'll leave the webinar open for a few more minutes so that you can grab those. But
hold on just 1 second.
Yeah, because didn't we do like a little survey, James, something like that? And we also have where if you want to talk to us one-on-one, it's such an honor to have been part of this. But if you have some intimate personal questions that maybe it's better to kind of talk offline, I think that there's ways to get in touch with any one of us, right?
Yeah, absolutely. Yeah. Absolutely. We'll make sure that goes out to y'all. Again, if the automated email doesn't capture it with the survey and the links, you'll get a follow-up email no later than tomorrow morning with, our information and, ability to follow up. And then we'll keep you posted as to when the next one is.
That's so perfect. And, when you do come to the next one, invite a friend.
Yeah.
Yeah. We all need to be in communication with each other and learning and sharing.
Awesome. Okay. I think that's it.
Okay.
There's Calendly links right there in the chat. So you should now see there's some links there. So if you want to grab those will go out in an email to you. Everybody have a great evening. Be safe. be healthy,
Mhm.
love your partner. If you don't have a partner, love everybody in your family, love your friends, and we'll see you next time.
Bye.
Bye.
Thanks, everybody.
See ya.
Thank you.